Tesla stock, no AI hype, buy the dip. I was just reading through this article. This gentleman makes some really compelling, interesting points that I wanted to kind of draw to your guys' attention here in regards to Tesla stock. It's a very Tesla stock focused kind of article here. And so I want to kind of read through this with you guys, kind of react to this, give my perspectives and opinions in regards to what this gentleman is talking about here. So appreciate everybody joining me as always. Thanks so much for being here, folks. Thank you for being subscribed. We are approaching 30,000 subscribers on the channel now, so I appreciate y'all. And also, for Seeking Alpha, I did a sponsorship with them on my main channel probably a week or two ago, and they gave me a link that's for like a free 14-day trial. So if you want to read like more Tesla articles out there, or Palantir, or whatever stock you care about, you can certainly do that as a free 14-day trial. So I'll put that as a pinned comment for you guys, for if anybody wants to get that free 14-day trial. Okay, so Tesla's recent run-up back to $1 trillion valuation has many analysts scratching their heads. While many still regard Tesla as primarily a car company, others call it the biggest AI play around. Despite Tesla's recent decrease in profitability, the company illustrated an excellent ability to acquire market share from its competitors. Also, Tesla remains substantially more profitable than traditional automakers and well ahead of pure EV competition. Tesla deserves its premium valuation, and its stock should appreciate considerably as Tesla continues to grow sales aggressively and improving profitability in the coming years. And this gentleman also gives kind of his price targets over the next few years for Tesla stock, and I'll kind of share my opinions and perspectives on if I think those prices are pretty accurate. And a little spoiler alert, I gotta say, I think his prices are pretty realistic. Let's just put it that way in regards to stock price over time. Okay, Tesla stock has had quite a run-up since I discussed the bottom of the EV giant's share price at about the $100 and $120 range. We've seen Tesla's share price nearly triple, appreciating by approximately 180% since the stock price crashed to bottom early this year. We've recently seen a 15% correction in Tesla's share price as Goldman Sachs and other investment houses came out with downgrades after a 6-month run-up in regards to Tesla stock, right? Now, this gentleman brings out a great point, one of those points a little later on this article that, it makes so much dang sense, okay? I'll just put it that way. Despite being overbought in the near term, Tesla stock offers significant... Okay, hold on, okay? Hold your horses just a moment here, okay? See this sentence right here? Despite being overbought in the near term, I think that's important to just understand. When somebody says a stock's overbought, right, basically they're meaning kind of on the technical side, it's being bought. And there's certain things that are being hit and triggered that are basically saying the stock's being overbought in the short term, right? So just keep that in mind. It doesn't mean it's being overbought for the long term. It's just something that's going on in the short term, right? But Tesla, it's funny because Tesla stock in the technical side, I've heard them a million times. People say, "Oh, it's overbought," and then it somehow runs through these different technicals, and next thing you know, it doesn't look overbought anymore, and it happens quick. Tesla stock offers significant intermediate and long-term potential. While Tesla remains well disguised as an automaker, the EV leader offers enormous potential in the energy generation and storage, robotics, AI, and more. Furthermore, Tesla should continue to grow sales rapidly, and the company should continue optimizing operations and increasing profitability substantially as it moves forward. That's a point I always make. People think Tesla's profitability has peaked or margins have peaked or things like that, but at the end of the day, like companies like Tesla, they just get smarter and better at doing these things. And so, they got a long way to go in that whole battle, right? I mean, heck, 5 years ago, people looked at this as just some massive money-losing furnace company. Like, think about how much progress they've made just over the past 5 years. Due to its high level of profitability, significant profitability potential, and enormous growth prospects, Tesla deserves its premium valuation, and the company's stock price should appreciate considerably in the coming years. If you want to read through the technical stuff, you can. I'm not obviously some technical trader. I don't care anything about that. So if you want to read that, you can read through the article. When were investment houses positive on Tesla? I like this, okay? This is a really phenomenal point. Goldman Sachs changed its buy rating to neutral regarding Tesla shares. The investment bank put out a $248 price target for the company's stock. Several days ago, Morgan Stanley and Adam Jonas, okay, downgraded Tesla from a buy to a hold while raising his price target to $250 from $200. Barclays Levy came out with a similar report, downgrading Tesla from buy to hold while growing the price target from 220 to 260. Isn't that funny how all these folks downgrade the stock, but then they massively raise their price targets? Oh, what a beautiful thing on Wall Street. Let's downgrade the stock, but let's actually raise our price target massively for the stock. However, when were investment houses ever forward-looking or right about Tesla? Boom. Boom, boom, boom. Okay. 100% perfect point there. When were they? Okay. These folks are usually, especially these big investment houses, they usually have been traditionally very negative on Tesla. Very negative. And so I do think that's a good point he makes there, okay? This is not like these guys have had Tesla's back any major part of this way. They never really have. So that's just a phenomenal point. I've been reporting on Tesla for about 6 years now. I propose that Tesla could become a $1 trillion company when its valuation hit the $30 to $50 billion range. Hey, you watching my videos, man? I remember some people were outraged by my report, and Tesla remained one of the most shorted companies for years. Also, many analysts were skeptical of Tesla the last few years, missing out on much of the spectacular gains over the previous decade. Therefore, while seeing some analysts pulling the plug on Tesla, the downgrade cycle is transitory. Gosh, I don't even want to read that word ever again. And Tesla's share price, it's the famous Jay Powell word there, okay? And Tesla's share price should continue rising long term. Tesla's a big AI play around. The biggest AI play around. ARK's Invest Kathy Wood called Tesla the biggest AI play around. The fund manager cited Tesla's immense potential in driverless taxi area, adding that the auto giant could see a massive run-up in its stock price to around $2,000 in the coming years. Wood also predicted that autonomous driving platforms will deliver $10 trillion in revenues by from almost zero by 2038 globally. Yeah, these things are exciting, but it's just like, it's hard to predict how big markets will be when you haven't even got to the point of the market actually happening yet. So, let's wait a little bit here. Tesla has had an extensive AI and robotics program, including projects like Tesla Bot, FSD chips, Dojo chips, and much more. Therefore, it's challenging to value Tesla like a traditional automaker, provided that the company has enormous potential. 100%, but people won't give Tesla credit for any of these other opportunities until it starts to generate revenue. That's the way Wall Street works, okay? Once you start generating some substantial revenue, that's the moment that all of a sudden analysts can start to project in some numbers. For right now, they're at the end of the day, no one's going to give them really credit for that right now, okay? Tesla's abnormal profitability. I like this part. Tesla remains abnormally profitable for an auto company, with tremendous sales growth and profitability growth potential as we advance. Tesla generated a gross profit margin of about 23% in the latest quarter, a decline from the 27% gross margin the company saw last year. While the deterioration appears substantial, we should recognize that the lower profit margins occurred because of the temporary economic slowdown, absolutely, and Tesla's price-cutting measures to acquire market share from its competitors, abso-dang-lutely. In its recent round of price cuts, Tesla brought the price of its mainstream Model 3 vehicle below $40,000 in the U.S. Americans can now save $2,000 on a standard Model 3 vehicle and receive $3,000 in savings when purchasing a Model Y. It's pretty clear for Tesla to make it is pretty simple for Tesla to make the significant price cuts as it remains highly profitable in any case. Conversely, it is far more difficult for newer EV companies to compete with Tesla. This is very, very important, okay? Companies like Lucid, Rivian, NIO, and others are finding out just how complex the car game is. In addition to mass production, newer EV startups recognize the difficulty in dealing with the slower than expected economy and the challenges of competing with Tesla in the ultra-competitive EV space. 100%. A lot of these EV makers are going under right now, or are trying to figure out if they can even make it another year or two, essentially, okay? And I was just reading recently, I think it was Lordstown Motors, I believe they just went under, filed for bankruptcy, if I recall, right? And, most of these guys are going to go under or need like a bailout type buyout from a bigger automaker. That's, in my opinion, what's going to happen. Tesla's profitability metrics. This is a trailing 12-month revenue over time, right? Trailing 12-month gross profit over time, and their gross margin over time, which, I understand we're not at the peak anymore, right? But we could certainly get back up there again, right? And other thing to recognize is this company used to have gross margins of, kind of in the 15 to 20% range, and now they're obviously significantly over 20%. We've seen a steady rise in Tesla's profitability metrics in recent years, as Tesla optimized the production of the Model 3 and other vehicles. Its gross profit margin nearly doubled from a low of around 14% to a high of around 27% in early 2022. The recent decline in gross margin is likely due to the transitory, challenging market conditions and competitive price cuts, not a Tesla-specific problem. 100%, I agree. Despite the transitory drop in Tesla's profitability, its gross margin should recover and return to exceptionally high level of close to 30%. Moreover, let's discuss how profitable Tesla is compared to other automakers. And yeah, I can definitely see Tesla getting back to 30% type gross margins. I think it's a potential that they could get even higher than that, especially if their services business really grows out to be a beast over this next 5 to 10 years. Okay? Now, in the short term, obviously with kind of macro conditions a little, let's call it weaker, especially on a global scale, and ramping a new vehicle, which is going to be Cybertruck when we're talking about that, obviously, right? I think gross margins still won't be the most exciting for the remainder of this year. I think we could start seeing a nice tick up in gross margins starting in 2024, though. That's my opinion, that's my belief. Recent gross profit margins, General Motors at about 13%, Ford at 15%, Toyota at 17%, Volkswagen at 19%, Honda at 20%, right? So obviously Tesla's kicking butt. We see normal gross profit margins of 10 to 20% for many auto stocks. However, we only see the sustainable 20 to 30% gross margins from Tesla. Moreover, companies like Lucid, Rivian, and other EV startups have yet to demonstrate ability to mass produce vehicles, never mind producing substantial profits. Also, as Tesla continues expanding into robotics, chips, and AI, the company should provide substantial sales growth, becoming more profitable the coming years, right? And so here are some projections for what Tesla's going to do future revenue-wise here, okay? Now, my belief kind of on this is you shouldn't, how do I put it? Don't put too much faith in the analyst estimates over time, okay? Especially anything past 2025, right? So they've been doing about 23% revenue growth in 2023, obviously this year, right? I think that's very, very doable. They have them going up to about 30% next year. I think 30% plus is pretty in the bag outside of a complete economic collapse or something like that happening. As long as we know, the economy stays decent, I think we'll have above 30% growth. And the main reason being is Cybertruck. I think Cybertruck's going to be much bigger numbers-wise than a lot of folks realize. Plus, obviously, Model Y and Model 3 are going to continue to put up their numbers, right? And then they have them doing about 24% roughly revenue growth in 2025 for the company here, okay? Now, Tesla should deliver approximately $100 billion in revenues this year. Moreover, consensus analyst figures imply Tesla should provide about $130 billion in revenues next year, roughly 30% year-over-year growth. Additionally, Tesla still has a long growth runway and should provide substantial 15 to 30% revenue growth in the coming years. Furthermore, current revenue and earnings per share growth projections may be lowballed. Yes. And Tesla could surpass the depressed forecast as we advance, okay? So here we have consensus EPS estimates. So analysts have them doing $3.49 this year, right? Which, if you're trying to value the company based upon what analysts have them doing this year, you're at about a 69 PE ratio. If you're judging them off of what analysts have for next year, which analysts have them doing 505, that's about 47 for PE. Next year, really, in my opinion, next year's numbers come down to one thing, okay? In terms of the EPS side, it comes down to how well are they able to ramp Cybertruck in a profitable manner. The company has, obviously, this is going to be pretty much their 5th vehicle they've ramped now, right? Start out with Model S, then Model X, Model 3, Model Y, now we got Cybertruck. They've gotten better and better at these ramps over time, and so I'm going to lean toward the side of maybe they're a little more profitable than folks are expecting next year, okay? Consensus forecasts predict an EPS decline of about 15% this year. Next year's consensus figure is only $5.05, while the range is from $3.70 to $8.30. Is extensive. Yeah, I would call that extensive, okay? This dynamic implies that there's little consensus on what Tesla will earn in the coming years. Why is that? Well, one, analysts have always had trouble judging this company. And the second component, actually there's two more components. The second component is cybertruck. How quickly are they able to get that to very nice margins and profitability, okay? The third component that makes it so difficult to figure out Tesla's earnings per share, other than the economy, other than things like how fast can they ramp cybertruck profitability, the third component has to do with Elon Musk, okay? And what does Elon and the team want to do around pricing for next year? Do they want to start raising price again? Do they want to keep pricing consistent? And pricing, I'm really talking about Model 3 and Model Y, okay? Do they want to go up, down, or just keep it consistent, right? And that can obviously change the margin profile, that can change even the revenue profile, and that can change the company's, ultimately at the end of the day, can change your earnings per share in a pretty substantial way, okay? So I think that's why it's such a huge divergence there. This gentleman says, I expect Tesla to make closer to $4 in EPS this year and about $6 to $7 a share in 2024. I don't think that's a crazy number to put out there. Moreover, Tesla could earn around $8 to $10 in EPS in 2025. Yeah, as long as the economy is decent, yes. Therefore, while forward PE ratios may appear elevated now, Tesla's valuation may be lower than it seems due to Tesla's remarkable earning ability. If Tesla provides EPS of $6 to $7 next year, its stock is now trading at a forward PE ratio of 34 to 40. Moreover, and here's a way to think about that. If they're trading at that sort of forward PE, right, that's about, let's call it double the market roughly. Well, let me ask you this. Do you think Tesla's going to at least 2x the average revenue and earnings per share growth of an average public company over the next few years? You should say yes, okay? Yes, they should. That's pretty in the bag. The bigger question is, do they 3x, 5x, 10x an average company's revenue growth and earnings per share growth over the next 5-10 years? That's a real question. And so to pay a 2x valuation, I don't think is crazy whatsoever. Moreover, if Tesla declines to about $200, we may be looking at a stock trading at a forward PE ratio below 30, making Tesla shares appear inexpensive again. Furthermore, if we consider 2025's earnings power, $8 to $10 implies the stock is now trading at a 24 to 30 2025 earnings per share. Likewise, if Tesla declined to $200 buy level, the stock may sell at approximately 20 to 28 2025 earnings per share. Okay. Now, let's look at what this gentleman believes Tesla's stock price is going to look like in future years, and I'll tell you how realistic or not realistic I think these numbers are. Okay. So this gentleman has basically Tesla's stock price being $240 this year. Next year he's got it being $350. 2025 he's got it being $480. 2026, he's got it being $627. 2027, $800, $930, just over $1,000 in 2029, and then $1,200 in 2030. So first thing I'll say is I think these numbers are I think they're actually fairly conservative. I really do. I think they're actually fairly conservative, okay? I want to push the two numbers I have a problem with the stock price wise in terms of I think he's too low with his numbers. Can you guess them? Okay. What I believe, and this is assuming there's no sort of economic crash or something like that and the economy just stays at least decent over the next couple of years. I think his 2024 and 2025 numbers are too lowballed, in my personal opinion, okay? I gotta say, seeing how well Tesla's held up in a very tough environment, and I do believe personally that Tesla has taken as much margin hit as they'll take in here in 2023, and I believe you're going to start to see margin expansion again next year. So when you see what Cybertruck starts to put up for numbers in 2024, and when you see their margins start to expand again in 2024, which I believe is going to happen, I believe the stock will start to be respected on a much higher level, and so I wouldn't be surprised at all, as long as the economy is decent in 2024 and 2025, if the stock price doesn't rally quite a bit more. Am I going to play calls on it? Probably not. but I wouldn't be surprised at all. Let's just put it that way, because those are two massive, massive things for the company. Tesla's risks. A slowdown in demand, increased competition, supply issues, decreased growth, issues with regulators and foreign governments, and other variables are all risks that we should consider before betting on Tesla to move higher. Serious concerns should cause Tesla's valuation to lose altitude, compress its valuation, or compress its multiple, basically talking about its PE, and the company's share price could even head in reverse if any serious issues should arise. Sure, but Tesla always has to deal with a lot of issues, and all big companies always have to deal with a lot of issues. That's just something you got to get over in the market. Therefore, one should consider these and other risks carefully before committing any capital to Tesla investment. Editor's note, this article discusses investments alongside what is this? Oh, that was it. Okay, yeah. there it was. Okay, we went over the risk factors. And absolutely, I mean, Tesla, the biggest risk, in my opinion, in regards to Tesla, has nothing, absolutely nothing to do with EV competition, the big automakers, any of that, okay? The only risk I see for Tesla over the next couple of years is the economy. And if the economy was to get in a bad place, that could hurt Tesla's numbers significantly, as we have seen over kind of the past, few quarters, right? Obviously, interest rates spiked up massively, and it makes it a tougher demand environment for anything that is a big ticket purchase, such as houses, cars, things like that, right? And so that's the only major risk over the next few years I see for Tesla. This competition, it's a joke. And Tesla's going to continue to, in my opinion, massively outgrow the industry. And I think their margins are going to head back up as long as we have a decent economy over the next few years. So that's my opinion. Hope you guys enjoy this as always. I appreciate you guys joining me. Like I said, I'll put that free 14-day trial as a pinned comment down there if you want access to that. Other than that, check out my description area down there and take advantage of some workshops I put together for you guys a couple weeks ago. One is investing in 2023 and beyond. If you make less than $100,000 a year, and then I put one together if you make over $100,000 a year. Those are in the description area down there to get access to those. Those should help you out. Those are absolutely free to access, okay? Much love as always, and have a great day.